Eton and Sarah are speaking for Darren.
Oh yeah. I saw that. Yeah, we'll talk. Yeah, I saw. I got the. Um, all right. Okay. So. All right. What is the time? Well, one more minute, and we will get started. It's yeah, there is some issues going on with Zoom right now. So it's not Zoom's fault. It's just upgrades with these new privacies. It can take some time, if you can believe it. It can literally take up to 2-3 minutes just to log in. Some people can get in sometimes, some don't. My first meeting this morning, it took them almost 10 minutes to get in. And you could see their name spinning. um, so it's pretty exciting. All right, let's get going. So great to be here. Once again, good morning, everyone, and welcome to the KoreSummit Webinar Series 2021. My name is Oscar Joffrey, and today I'm going to be joined by two leading experts, but one of them is playing a ghost. The other one's here, which is good. You know our format. It's really, really simple. We're here going to be talking for about an hour, 45 minutes, just kind of going back and forth. No PowerPoint presentations, just hearing good old-fashioned how you would normally interact with a company when you are engaging with them. And obviously, all of these videos are going to be available for you at the KoreSummit.io website, so you can go there at any time to review them. So it's pretty exciting. This is a topic that often comes up in all the discussions. I think it's the one topic that is the top of mind for everyone every single day, and that is, how do I get noticed for my RegA offering? I mean, it sounds simple enough, but as these experts will tell you, it does sound simple, but that simplicity does take time. So before we get started on the topic today, let's introduce our panelist who has been here before. If you don't know him by name, we call him Royal Andrew. And sir, the floor is yours. Well, we might as well have some fun. I mean,
sure, absolutely. Good morning again. My name is Andrew Korn. I am the founder and run E5A. We are a systematic, data-driven investor acquisition firm. So this topic is down the center of our fairway. We got our start actually working on financial products, exchange traded funds, mutual funds, hedge funds, private equity, real estate, etc. And then as the Jobs Act evolved, we got into Reg D and then Reg A plus. And then now that Reg CF is moving up to 5 million, we are jumping in on quite a few CFs already. Yesterday I reported 3, today I can report 4. So as we had another contract signed yesterday, we are limited to the number of clients that we can handle simultaneously. So that's an interesting thing and does allow us to be fairly selective in who we're working with. So we seek companies with a high probability of success based on having great ideas and strong management. So there you go.
Thank you. So we're going to have a fun time, obviously, until our next colleague arrives. You know, I'm going to put you on the spot, Andrew, and you and
Please.
I think it's great for everyone to know that regardless of what one does, I think it's important that before we dive directly, how do I get noticed? So let's talk about this new sector that is emerged, and it's been coined nicely, investor acquisition. Because, you know, for me personally, as an issuer, as a company looking to raise capital, if you mix the two up, they really are two different. And I was wondering if you could let's cover that part, and then we'll dive into the different tactical elements. And I hope I characterize them correctly? And you can tell me if I'm
Please,
wrong, but let's start with that.
I've been waiting for a forum to discuss this. So,
Yeah.
and it's something I've written about. So essentially, marketing is the big umbrella of what people think of how they're going to attract investors. And I frankly, the phase two of the first part of my career was in marketing. I started my career writing IPO roadshows and designing them, and have worked on hundreds of them, and that was in my 20s. So eventually I ended up selling that firm, and making a long story short, developed a multi-factor model for stock selection, became an equity portfolio manager, a chief investment officer, and designed exchange traded funds, and also ran a small hedge fund. And of course, more traditional portfolios, more on an institutional level than retail. And essentially what happened is I learned all about performance measurement and love things that are measurable. So when getting back after leaving asset management and coming back into the big marketing world, decided I only wanted to work on things that are measurable. And things that are measurable are things like assets under management, or the number of investors acquired for an offering, and the amount of money that they're putting in individually, and then what the median is. So, we can talk about marketing, which is great, which includes brand awareness and getting people understanding that, gee, this is a company, this is what it does, it's got an offering in the marketplace. And all those things are part of what we do, but we measure ourselves by the number of investors who come into the actual click the invest button and complete and send their money in. And that we refer to as investor acquisition. So that is a phrase that we coined about a year ago, and is one that we've been trying to get out into the mainstream, not only to differentiate ourselves, but others who are really focused on the final end result, which is investors that have placed money in who are for real.
Yeah, and that was great because it kind of gives everyone an overview of this heading, and people can now start to ask of any vendor or any participant, so to make sure that they actually understand there's a distinctively big difference. Another element that I would add to what you said is that it does look a lot like the market. It does fall into that, but it's got one particular different twist to it, is that the regulatory element, right? We can't overlook that is something that gets coupled together. Would you not agree?
I do agree with that, and the regulatory element is super important. And we enjoy very close ties with a bunch of the leading law firms from a compliance perspective, and also, the Series 24, the compliance people at leading broker dealers. And we speak about this a lot to clients and prospects, is that we write compliant copy all day long. Now, on the flip side of that, we also know the regulations really well. We've had FINRA as a client on again, off again. And people will then say, gee, does that mean that you're always writing things a certain way? And the answer to that is no. We know where the regulation is. We know where it ends. We know where that cusp is. And we push it. We push it as hard as we can, because we want to do the best for our clients as possible. And when you're looking at creative copy, one needs to know how to phrase it so that it will pass compliance or cause a discussion with compliance of what the intent is and where you're going with it, and then what's behind it. So when writing an ad, there needs to be the knowledge that if clicked, what they're going to see. Or if there's an ad, does it have a rollover that's going to give a disclaimer? So there's a bunch of ways of approaching it, and understanding the way compliance works actually allows you to be more creative rather than putting up walls. Because once the playing field is understood, we know a football field is 100 by 50. That is what you're going to play in, and you know what out of bounds is, but that doesn't mean you're not going to throw the ball really close to that line.
It's a very interesting perspective, but it is I think it's that, along with the tactics or techniques, we'll get into that, but that regulatory element, I think it's a big differentiator. You and I have spoken to many providers in the past that want to enter the market. Oh, I do marketing, I can do email blasting, all that. And initially, that's the easy part. That seems to be like the final execution. But the real key to it, where investor acquisition really differentiates itself, that particular company understands that message could have a regulatory implication on the company, the broker, everyone involved, and could land people in a bit of hot water.
Right. So there's a bunch of parts of this. So one of them is that we work very closely with PR and social media firms. We frequently will help produce a lot of the content behind it. When we are working with an issuer, we will put together a messaging platform, which isn't final copy for anything, but really gets to the heart of what the messaging will be. And we share that with other partners who are working to promote or acquire investors. So PR is something that's super important, getting press, adding credibility, et cetera. And if you're in Forbes and Fortune and Yahoo Finance, excuse me, and Market Watch and the Journal and Barron's, that's all great, but don't expect a link from the offering page to any of those articles because compliance will never allow it. That doesn't mean that those logos are not useful and that those articles can't be linked to from a corporate site that isn't part of the offering. So understanding those nuances and then how to leverage them and where to leverage them and how to work with partners is really important.
It's the best. In other words, the funnel. It's the best way to make sure that you don't get a knock what you're doing. It is. You do get full general solicitation, but there are rules. And I think the reason I'm spending a little bit more time on this, because obviously, we should have said, I think you said at the beginning, for those that are here and listening, and of course, on March the 15th, you can raise up to $75 million using Regulation A. I mean, that is a significant amount of capital. And so what does that mean? A lot of companies will be entering, and we're clearly all embracing that. That is a measure of success, and this is where we're getting to, but it comes with a discipline. Everybody needs to understand, and why that's important, because the companies ultimately could pay the final price if something goes wrong, and it will trickle down. Believe me, nobody's going to escape the SEC's little whip, but nobody wants to do that because it will be kind of this black mark that we all don't want, right? We all want best practices. We have an ecosystem that is fluid. Everybody works and understands how every entity does. So I wanted to spend that time in making sure the audience understood it's not just a word. It's not like investor relations or this is investor acquisition. It's a very thoughtful process that has a regulatory flavor to it.
Well,
that's the way I put it.
Yeah, and it is all about process. Essentially, how do you decide who you want to come and look at your offering? Then how are you going to get them there? And then if you get them there, how many times do you need to get them there? What types of materials do they need to review before they're going to say, yes, I'm willing to click the invest button? And then once they click the invest button, what are you going to do to convince them to not only finish filling out the form, but also send their money in through debit card, credit card, ACH, however they're going to do it? That final step, without it, then everything you did up until then is a waste of time. So we spend a lot of time on data and figuring out who we want to go after and why. So, there's an old philosophical question. If a tree falls in the forest and no one's there to hear it, did it make a sound? In investor acquisition, we say, Not the right question. If a tree falls in the forest, was the right person there to hear it? Because if it's not the right audience, we don't really care if it made a sound or not, because you can jump up and down and show people under 18 your product, which they may be really interested in and might even purchase, depending upon if it's a consumer product or not, but they're not old enough to invest. Might they be an influencer for their parent or guardian? Yes, but they are not truly the target audience. So we spend a lot of time looking and segmenting data to make sure that, first of all, that we have a large enough audience to solicit. Because if you are doing, let's say, a $20 million offering and you've got a minimum investment of $2,000, you're still going to need 2,000, at least 1,000 investors to fill that. Or is it 10,000 investors to fill that? Anyway, having that number is super important, because then you need to determine, is it even a viable offering? And that's one of the things we do very early on, is go through that math on the back of the napkin to make sure, gee, is this even doable? Because we don't want to set off on a path that's unachievable for us or for an issuer. So we have developed a very strong set of data of investors. It is approaching 1 million. I've stated before, we will reach 2 million by the end of the summer. And that essentially are people who invest in private companies. Many of them are accredited. The bulk of our current list is accredited. So we can start with that. But then what we're looking for is what we refer to as niche at scale. So if it's a medical device, what is it fulfilling? And if it's fulfilling something aimed at a specific audience, how large is that audience? How many of them suffer from whatever the affliction is that will be cured? I learned early on in my career that, if I've got a little rash right here and it doesn't itch, how much am I going to pay to get rid of it? If my back hurts and I can't sit and I can't stand, how much am I going to pay to make it so I can sit and stand? And there's an enormous gap between these things. So understanding the pain point and where that is super important. So if we wind up and say, gee, there are 10 million people who have this issue, and knowing that they're adults, some of them may have spouses, some of them may have families, some of them have parents, some of them have friends. We're now looking at a core group of 10 million plus influencers all around them. That's a very large group. That totally works. Now the question is, how do we acquire data on them? Oh, but they're going into the healthcare market. Who takes care of them? Are there specialists? Are there doctors? Are there practices? Are there technicians? All of these people end up being influencers. And as we acquire this data, we start sharing our thoughts and this data with our friends in the PR world and in the social media world, because we want to be working in concert. So when someone hires a firm like mine, they're not hiring me, they're hiring a process, they're hiring an ecosystem, they're hiring a team. But the single most important thing they're hiring is a focus on data and a focus on process to make sure that you can achieve your end result. Sorry, I could go on another half hour, but that's a spot for me to
that's good.
Stop.
No, what I want to do is I want to focus on where we started. Investor acquisition. It was really good. We broke it down that it is under the umbrella of marketing with the components of a regulatory process that distinguishes its differentiation completely. It's good to have a couple of both. But now let's talk about some of the specific tactical elements. I hope I used that word correctly. If not, you tell me what you want to call them.
Tactical is correct.
Okay. Tactical elements, because it's important that everybody understands there are a number of them. So, so you've already started talking about them. So let's talk about some of the obvious ones. Let's talk about video. So I'm going to go through each one. So let's try to make sure that we capsulate the importance of video investor acquisition. And tying it into everything we're talking.
Sure. So video is super important. There is video in every offering that we've worked on. Some of them are kind of homemade. Some of them are extremely professionally made. Some of them are 100% animated. So we're launching a RegA Plus campaign in a couple of weeks. And with that, it's a very complex company, what they do. It is super important what they do and involves US military and also aerospace and private aviation. And the whole thing's taking place in an opportunity zone. So there's tax benefits. Oh, and they're a small designated small business stock. So there's more tax benefits. So when we looked at all this and looked at what we could photograph, what we could do a video shoot on, we decided we would go completely animated on this because we could work through the various facets of this company. We have another company where we've got very dynamic management and they do super well on camera. So we ended up shooting essentially a talking head video where they're explaining what's going on. And you can feel their passion. So depending upon, there's a lot of factors to determine which way to go, but without a video, you are going to be losing a certain number of people who come to the offering page and want to hear and see without having to read and dig in too deep. And if I can just back up, because we're talking about video, before we even get to video, we get to touch points. And this is something that you are an expert in, Oscar, even though you may have never thought of it this way, but you have recently completed a RegD offering. So when you spoke to someone, how many conversations did it take to convince them to write a check? What was the substance of those conversations? Each one of those was a separate touch point. Was there an email in between? Was there a quick phone conversation in between? So did it take 4 for some people and 8 for others and 16 for maybe even others? So what are the outliers here? So understanding those touch points then really informs a lot of the tactics that a firm like mine performs to make sure that we are able to bring investors on a journey from unaware of you to aware of the structure of what they're investing in, the company, its history, the product, the market it's addressing, all the way to digging in deep to then allocating money and then hopefully telling friends and family about it so that they may invest as well. So that investor journey and the touch points combined then inform us to what tactics we want to deploy.
So each, obviously, every client's going to be different there because there are a number of tactical elements, and that's what you're journeying us through, and that's good. What I'm going to try to do is horn ourselves in a little because I have a surprise coming in for you. You thought you were I was gonna let you be. No, I got a surprise for you. You know me, if I don't spark it up, level up. Level up.
I love surprises, as you know.
Yeah, of course. So, all right, we talked one tactical element video. I know you've touched on others, but now tell, briefly again, email marketing. This is another tactical element that companies can utilize to get it. So just an overview of that, and then I'll go to the.
Sure. So email marketing is greatly misunderstood. People say, I get too many emails. I'm not interested. I don't want them. A lot of them go to my spam folder. So first of all, email is still one of the most effective media out there. And we use it in multiple ways. We use it at the very beginning because once we've identified data, we can get precision data on people, find publishers with double opt-in relationships with them, and send them email from a trusted source. So if CoreConnex was our client and you send out an email, it's going to have a certain open rate. If the Wall Street Journal sends it out talking about a trusted partner, it's going to have a different open rate because they have a double opt-in relationship and people are used to receiving emails about other companies from the journal. So I'm just using the journal as one example. Then here's the next thing. Let's say someone reads an article, comes to your page, and then goes to the offering page. About 25 to 40% of the time, we actually can tag them, and through that tag, reverse that into an email address, and then send them an email to invite them back to that page. So remarketing is what that's called, and we use that extensively. Now, what ends up happening is we shut it off if someone clicks the invest button, then they won't receive that. So this is part of the marketing automation process that has to do with the touch points. Another place we use email is for people who click invest, but they do not complete their investment. We're going to start sending them emails, inviting them back to complete their investment. And then depending upon the type of offering, we may not even send them back to the offering page. We may send them right back to the button, or we might send them someplace else where we've set something up just for that group. Another place, just thinking out loud of where we'll use email, is we refer to these people as clusters. We end up with a cluster of people who have been to the offering page, but they've not clicked invest. And we may set up a webinar for them, and we're going to advertise to them as well as sending email. Or we have a cluster of people who have clicked invest but haven't completed. Again, there may be a webinar for them. Or we might invite them to a one-on-one with the CEO or an investor relations person or the chief technology officer or something else. And we might do that anticipating a webinar, and we're using that to see what can we get from a content standpoint. So there's a lot of ways that we're using email. It's not just simply, spray and pray, as they call it. And that's something that we never do, because we're always starting with, we know that they're part of this mass niche audience, or that they are actively an investor in private companies. So they're already going to be in one of these two data groups. So our open rates are always going to be higher, and our click-through rates are not only going to be higher, going to be of higher quality as well, because they're fulfilling that initial data. More information than you wanted?
No. Listen, I know it. Look, we're trying to, I think for the audience, I just want to make sure, investor acquisition is one area, but it involves so many different tactical elements, and they're all interlinked, but I want to make sure they understand what each one is, right?
Well, and we could do a whole hour just on email, because I could get into the precision of our testing patterns. People are often surprised when we submit 20 email subject lines for compliance approval all at once. It's like, well, aren't you going to test them and then measure and optimize? Yeah, but we're going to need at least 20 just to start. So there's an awful lot of work that goes into this and planning. And we want to go back to compliance in a very measured way and sparingly, because we want them on our side, not to be an annoyance. So
yeah, of course,
we like to group things and also make sure that we have lots of ammunition for, as we're pivoting and as we're optimizing, which direction are we going to go in. So
okay, so the next tactical element, because I got, so keep in mind 1, 2, 3, 4, 5, 6, 7. So, and I still got a special guest that I want to bring in, because I think it'll kind of put it in good perspective. But advertising, and I'm going to say advertising television, because we're now, we're hearing about it. So from the investor acquisition, it's now a tactical.
This is an area that we are very leery of. So placing an ad on cable TV at night is something we won't do. Now, why? The ROI may be there or is worth testing, except if you are doing an offering and if you are showing the URL to the offering page, there essentially needs to be one click to the offering circular. And there is no way of doing that. Now, if you're doing a pre-roll, like let's say it's a YouTube or you're on FinTech TV, there may be a way of also having not only a link to the offering page, but a link to the offering circular. And that keeps the lawyers and compliance people happy, which then makes me happy. So we need to be really careful of what we can do from a compliance standpoint. Just like if your call to action on an email is learn more, it's a different compliance case than if you're saying invest now. So one needs to be very careful and clear of what the call to action is, and then what are the consequences from a compliance standpoint. So TV is something that we love. There's a lot of use cases that work, but there are a lot of use cases that don't work. And then, of course, there are things that are cost prohibitive as well.
Yeah, cost is one issue, but I'm going to bring up the regulatory issue. And that is, there's a big difference between using television before your capital raise and versus when it's live, which is the SEC is very specific about the fact that on a Reg A, the investor must have access to that link to the Form 1. And on television, that's just not possible. I know most of you will say, yes, Oscar, it is. The new televisions, yes, the new TVs, but the SEC is not going by. They want either everybody to have it or you can't exclude others from it. So, but that was good. But now we're going to talk about advertising online ads, which again, it sounds like it's the same, but it's not. So your comments on that?
So first of all, online advertising is just so vast. And I would break that into probably 10 to 15 different channels. What one does on the web can be contextual. So if you are placing an ad on a niche site that might also, or it wouldn't be unusual for them to cover your issuer editorially, you may want to send a very different message than you would, let's say, on a general news site. There are lots of pages that we don't want to have anything to do with. There's placement on the page. Like if it's at the top of the page, you know they're going to see it, and that is going to fire. You're going to be charged for that impression, and you know they saw it. Now, if it's at the bottom of the page, it costs less, but is that ad even as good? So now I could argue that both ways. First of all, you may end up being charged for the impression and they never really scrolled down and saw it. I could also argue that if they scroll down and they're really interested in what they're reading and they're spending time on it, there's probably a great probability that they're seeing your ad as well. And your click-through rate actually might, from an ROI standpoint, being that you paid less for it, work out even better. Then there's a brand safety. It's like, I want to be all over travel sites, as a, for instance, a simple example, but I don't want to be at the clothing optional sites because that is not safe for my brand. Or it might be, I don't want to be going to certain areas of the world where, again, I just don't feel it is brand safe. So there's a lot of stuff that dealing with brand safety, the placement of the ad, etc. Next thing, which goes to, messaging and optimization, is that size matters. We like to work in the smallest ad size when developing our ads and then build them out to the various sizes. And we may say, gee, this ad is mediocre compared to this ad with fewer words. But in a large size, actually, we may get more clicks on that ad that wind up being clicks to the invest button, because when they clicked on the ad, they truly understood what they were seeing, what they were clicking on, where the one with fewer words may have gotten more clicks and more visits to the offering page, but they were of lower quality. So there's an awful lot that's going on with this to figure out, and the size of these ads really make a big difference.
It seems to like it's as you said, advertising online. It's not just saying, "Hey, I'm going to put an ad in Facebook," and away it goes. What I'm hearing in this particular, it's pretty in depth, but we're giving everybody kind of a sense. Here's video, email marketing, advertising on television, and when, and of course legal, and now advertising online. And I got 4 more because I'm cognizant of time and all that. But yeah, you bet.
Because we
webinars.
could
I
just
mean,
talk about Facebook for 20 minutes too.
yeah, of course, given the latest fiasco we're all going
Or
through.
Instagram or TikTok. So
Yeah, exactly. So, the latest tactical component we're now seeing is webinars. Webinars are now catching on as part of a technique by companies. So, we'd love to hear your comments on this.
yeah, so there are two use cases where we really like to leverage the webinar. We're not big on just saying, hey, we're going to do a webinar as a initial touch point with a new prospective investor. We like to use webinars when we've gotten lots of people to the offering page, but there hasn't been an avalanche of people investing yet, because it may be we need to invite them to something a little calmer, a little bit more thoughtful, where they're willing to invest a little bit more time. And then from there, they can go directly to the invest button because they've heard directly from the CEO. They've seen things be a little bit more real and dynamic, and less staged and orchestrated the way we generally will do things on an offering page. I also mentioned we use webinars for when we get a cluster of people who have clicked invest but haven't completed. How is the content different between those two webinars? Because it should be. The ask is different. One is a consideration, the other is a completion. So what is the mindset behind that? What are the motivations that we're seeking? And then what are we going to do from a content standpoint to achieve each of those two goals? So there's a lot of science and logic, and as I always say, process behind this. It's not just, hey, we're going to put on a webinar. Desired result is always the first thing to think about.
Yeah, of course. It goes without a doubt. It gives people, I hope, if anything, it tells people, look, these are all the time. Because some people only think, oh, it's got to be email marketing, or no, online ads is the only thing. And they may not realize that you need a combination of all of them, right? That's what we've learned. So you're raising $75 million. Orchestration. I like that word, orchestration.
Yeah.
So
it's why, actually, if someone walked through our process, we have PR and social in there, even though we're not the ones doing it. Not that we don't interfere in them, and also support those efforts. And, we write LinkedIn posts, even though we're not the PR agency, because we want that for the very first day. We write a lot of things that we want for the first day. And then that's taken by the PR team and run with. And sometimes they're ahead of us on that, but we'll still weigh in on those types of things because they're highly useful.
And so the next one I'm gonna, obviously this is one we've been hearing about for years. Some companies budget big dollars for it. The influencers, right? This is the big one. I get the right influencer, I get the right movie star, pop star, boom. We saw that in cannabis and we saw how that played out. But still, I mean, the role of an influencer, being involved in that. What are your thoughts on this?
Well, there's a bunch of different types of influencers. The influencers who are users of the products, who are highly authentic, are one type. If there's another type of user who is a celebrity and they're more pay to play, whether it's warrants or cash or whatever it is, you need to be really careful about disclosure and authenticity. So I'm not against that at all. Getting a sports figure or a movie star is certainly a really, really good thing. But you need to be highly strategic and, again, think about the outcome. And did they buy any of their followers, or all their followers are real? And is it on Instagram or is it on Twitter? Because, again, that's going to be a different thing that you're going to want them to do. How do you want them to communicate? What do you want them to say? And are they truly all in?
Well, Andrew, I don't know how you feel. I mean, I like all that. I mean, but the thing is, I think it's gone even beyond that. I mean, okay, here I got a great gadget, but maybe I'm a social. They need to also buy into it, right? They can't just be influencing something and then, oh yeah, I don't know what that is. They save the earth, and then they see pictures of them throwing out paper out in the middle of the street, or
well, that's what I meant by all in. They need to
yeah,
really have their heart in it, or it
yeah,
doesn't usually work.
yeah. It's a great point. So, I brought in a special guest just to stir it up a bit. Ding, ding,
Sure.
ding. And I'm going to ask our guest. I brought in a CEO of a company that is going to be going live on a RegA. And this for any young company or any company of any type, it's a lot, to digest all the different elements that they need to do. And obviously, when you have already current shareholders, everybody's looking at your business and saying, wow, you're going to spend all that money. I mean, but there was something you said early in the conversation that I'm going to bring back, Andrew, because it actually made me think about something that we've been focusing a lot, and Trung, I'm going to bring you in. I can't let it go. And that is that whenever we talk to people about RegA or RegCF, but RegA in particular, people go, in some general discussion, oh, it is so much money that you got to spend. And, it's cheaper and lower on the other side. And you then started saying, Oscar, you guys just closed your Reg D. And you started saying how many phone calls, how many emails, and webinars and all that. And I'm going, it's not any cheaper. In fact, it's the meetings are ongoing. Sometimes it could be 3-4 times. It could be months before they make their decision. And when they do, then they, it's COVID-19. The pricing's got to be different. Why? So we're gonna do a webinar on that, because I think it's important people understand that every form of capital raising has a cost to it.
Well, when we talked about VCs, one of the great things that the attorney who was on the webinar with us said is that the VC submits to you a term sheet. And in the case of a Reg A or Reg CF, you're the one submitting the term sheet, and people can either invest or not invest, but you're not going to change that for an individual investor. So although I will say there are cases where a whale investor has come in, not someone who invests in whales, a very large investor, not physically the size of their check. And then sometimes they won't invest in the Reg A, and there'll be a separate offering just for them. And there might be some terms that are changed on that. But by and large, people investing in a Reg A, it's a one size fits all. And there's a really nice thing about that.
That's great. All right, so I brought in our special guest.
Love your background.
Thanks.
Yeah, I was just gonna say he lived it up. I mean, I'm celebrating, Chinese New Year, Xinye Kuai Lo for everyone, wishing everyone a prosperous, fortuitous New Year in 2021. I invited Trung again because of where he's at. He's just full disclosure for everyone. Trung is a client of KoreConnect, so I just want to make sure that I make everyone, meaning he's using some our technology, but that's not what we're here to talk about. Trung is a unique individual entrepreneur that Andrew and Andrew, you've not met Trung yet, right?
I've actually spoken with you. Yes.
Oh, okay.
It may have been a different background, so you may have not recognized it, but this is my trademark background to everyone recognized. But we did speak, and you were actually the one that introduced me to, not directly to KoreConnect, but you told me to look into them, and I reached out to them thereafter.
I did something helpful. I'm glad about that.
Yeah.
Oh man, there you are again. I got to give you another check mark, and now I'm behind again. Just when I thought I was going to get you. No, but so the thing that it's interesting in Trung's journey is that here's a CEO doing the journey of getting his capital raise and putting all the pieces together. But this discussion is really predominantly around the investor acquisition. And obviously, Andrew and I have been talking about the different tactical elements But I'm bringing you in because you're at that stage now where you're days away from getting the approval, which is great. So we can talk. We can freely talk right now, because once you're live, we can't do this with you. So it's an opportunity to, but first introduce yourself, tell everybody, what your company's doing, and then we're going to dive into it. Okay.
Great. So my name is Trung Pham. I'm the CEO of a company called Rise. We're actually based in Toronto. So we're a Canadian issuer. Makes us a little unique compared to the Americans. And we're a tech company in the IoT smart home space. So we design hardware and connected devices that allow you to motorize and automate your window blinds, shades, any type of window covering. Right now we have one product in the market. We're launching another one, and we're in the development of a few more that all revolve around window coverings. Our first market is the residential market, but we have plans to launch into the commercial real estate market. A little bit background about where we are in terms of traction. We did raise from a lot of angels and micro VCs, about 3.5 US, and we did receive just over $4 million Canadian in federal clean tech grants to begin expanding into commercial real estate. Revenues is just north of 4.5 million US, all online. So we haven't even scratched the surface, because we do have plans to launch into other channels like retailer and B2B and whatnot.
Great, thank you. So that kind of tells, now you know who, I know, Andrew,
All
you
comes
go through a lot
flooding back.
of,
Yeah, now I
just
remember.
Say,
Yeah.
Now I remember.
I remember your website too.
Yeah.
Yeah, and you said talk to Oscar because fellow Canadians. Is that what it is? Put the Canadians together and
No, it's because your service is good.
Yeah.
And we won't rebel, right? We're really nice people.
Everyone in the U.S. worries about the Canadians coming and attacking us.
Oh, they're coming.
We do.
They're coming. They're coming.
We do. We know you're coming. We're
all right.
Anticipating that.
So this conversation, I want to leave it to both of you, because let me tell you where I'm coming with this. So Trunk's coming in to the RegA, doing a lot of research, like most CEOs, reading everything they can get their hands on. And so I'm going to start with, before you started your RegA, did you understand first, did you even know there was a heading called investor acquisition? And this is important for us, Andrew, because it will tell us how much more education we have ahead of us. And then the next component to that, Trung, will be, once you did dive in, did you understand all the different tactical elements and how they're going to work for you, and how a firm like Andrew works with you to accomplish that goal?
So I actually didn't know the term that players in the space called it investor acquisition. I actually just called it investor acquisition. And the reason is because our company is strictly D2C, direct to consumer. So we're e-commerce, and when we acquire customers, it's called customer acquisition. So in this case, I just called it investor acquisition because it made logical sense. You're acquiring customers online using the same methods that we would acquire a customer online, using Facebook ads, paid media, unpaid media, stuff like that. So when we looked at the whole RegA space, and we discovered that you could do general solicitation and acquire investors using the same type of strategies we did in the e-commerce space, we basically took a look at what we did in the e-commerce space and applied it to investor acquisition. So obviously there's more compliance and regulations around that, but the strategies and the tactics are very similar.
Perfect. So the tactics were similar. So obviously you now understand that it wasn't just the tactical elements, but there's that regulatory process for it. How have you been blending in? And obviously, I mean, Andrew, as each client, I'm going to go back and forth with the both of you on this, but the question that I want you to come in afterwards answer is, as a client like Trung comes in, who has a bit of understanding, does that make it easier, or does it actually make it harder because they already have? So Trung, I'm going to go back to you first to complete that answer, and then we're going to go to Andrew.
Well, because we have experience with e-commerce and the idea of the funnel itself, it was more attractive to us to raise using this strategy. I always hear the saying, like, if you build it, they will come. So if you just list it on a third-party platform, investors will come. It's never like that. So you always have to drive traffic to your landing page or to your offering. So yeah, that was kind of our idea around that.
Andrew, it's yours, sir.
So we either have the best experience or the worst experience with companies who have a direct-to-consumer business. One of the things that makes it a great experience is that there are a lot of the language that we use that is similar and familiar. Second is that there's overlapping skill sets, which either works out really well or really poorly. We have clients right now who are coding things for us, or as I said, we build an ad in one size and they're building out the additional sizes for us. So that can work out really well, save the client money, have everyone involved. Where it doesn't work out well is when their marketing department doesn't understand that we are mercenaries. We're here for the offering. We're not here to take over their jobs. We're not here to replace anyone. We're coming in for one thing, which is to help them acquire investors. The funnel for investor acquisition is different than for customer acquisition. The number of touch points, the length, the motivations, all those things are different. So when a direct-to-consumer issuer understands that, we end up working really well together. We have a specific issuer where their internal team used our messaging brief and they created ads, we created ads, and then we blended them. And in that blending, I honestly, when I see an ad live now, because it's a live offering, I don't remember, nor do I care who wrote that line, because we're working as a team towards one goal. When it becomes competitive, then it's a nightmare client. So
it shouldn't be competitive though, right, Andrew?
It shouldn't, because we're all rowing the boat together, aiming to get to the same destination. So when it's done collaboratively, that's great. But whenever there are humans involved, there can be really great things and there can be some not great things. So that's really where that goes. Or when budget discussions happen. And sometimes the direct-to-consumer company is like, wow, you're putting all this money towards online advertising, not for the product, but to raise the money. And it's like, yeah, you're going to raise the money so that you can put all the money to that advertising for direct-to-consumer. So don't be resentful of putting money towards it now. Now, I run what's called a radically transparent company. We don't pay for any of the media, nor do we do media markup. So we make sure that the client can pay for everything directly. That doesn't necessarily make that palatable to every team member, even though it does to the CEO and the CFO. So that's where things can run into trouble or where they can be fabulous.
So I think I want to add to that. I think a lot of I actually agree 100% with Andrew there, but I want to make a point that everything Andrew does this with his firm, but everything should be data driven if the e-commerce company understands the funnel. So as Andrew mentioned, if we're running ads and we have our messaging and Andrew has his messaging, we're not gonna crash heads if Andrew's conversions are better, because it's all in the data. You want the highest ROAS. So if you're spending $1 and Andrew's getting $10, I'm getting $5, there should be no human element that is getting angry or mad because they're performing less. I'd rather just offload it to Andrew because he's getting me 10 times my money. The second thing is that the e-commerce companies has to understand that these investors are also going to be your customers or your promoters. So they're going to share the company on their social platforms or to their clients, and that's going to drive you even more traffic and even more customers in the long run. So investor acquisition is also customer acquisition for a direct-to-consumer company like ours. That's the way we see things, and that's the way they should see it, because your investors are going to be the ones that promote you to their friends, family, and to their networks.
And in your case, I really agree, because of the maturity level of someone who probably, and I don't mean days and years, but someone who's going to utilize your product. So they're going to have a more sophisticated audience. The odds of them being someone who would invest in a private offering, I think, is a much higher probability than some of the other direct-to-consumer issuers that I've seen. So, I think that we would be in sync like that, and we could have a great conversation around that. But there are direct-to-consumer companies where we actually had one successful RegA, but most of their people in their database were not investors. Either they weren't affluent enough or they were too young. And, that made blasting out to 220,000 people highly unsuccessful. In fact, we created an alternative landing page so that we could throw away the data or not utilize that data in lookalike advertising and other places where we might want to leverage it. So, there's a lot of things that need to be thought through depending upon the issuer. I think you're a unique case that you totally get the data. You're driven by ROI. So, I commend you on everything you said and that you have absolutely the right attitudes.
So, so my question here, so this is an interesting one, that there are some dynamics sometimes. I know I had to adjust myself as well, that this marketing, we were going to keep it here, stay, focus on that, while this marketing for the investor acquisition, we're going to keep it separate. But some people won't. But I think, as Trung mentioned, you have to be data driven. Otherwise, you want to achieve your goal. I mean, like I tell anyone, what's the most important thing? Do you want to get everybody to know that you're using blockchain, or do you want to raise the money? Because I know I'm bringing that subject up because it does make a difference. You wanted that? Okay, not a problem. That route is going to cost you lots of dollars, but go there, no problem. And on this one, you want to raise money? Okay, let's get to it. Here's the tactical elements. So, so now that you've gone through this journey, Trung, you've spoken to a tremendous amount of players. What has changed from your strategy initially, from what you had from the e-commerce that you've added or you're thinking of adding? And have you considered the fact that the ones that you're not using now, you're going to be adding along the way? Because, the data we already have, data driven, is that we know the path to eventually close the offering. But I'd love to hear your comments.
So I think the great thing about the whole RegA process is that it's a 12-month process. So you're allowed to raise for up to 12 months. So I always say it's a marathon, not a sprint. And your marketing strategy for one quarter might be different for the other quarter. And you might need time to test and scale and change your strategy over time. So I don't think it's, I signed an agency and that's it. It's a really iterative process, just like any ads. You might be testing new audiences, new strategies. You have unpaid channels, you have paid channels. You're going to test and see what works. We might place an ad in a online newsletter, for example, and test the conversions on that. And then we might, just like Andrew said, the placement might be higher, might be lower, and the cost would be different, but we'll test that. But for us, it's a 12-month process. So what we have initially today, it may change 3 months from now. So that's the first thing I will say about investor acquisition. And I did want to make a comment. You mentioned something earlier about the whole cost of the RegA, and it always perplexes me. But if you actually look at the cost of a seed round or a Series A, it's probably just as expensive as launching a RegA, just to give people perspective. Because when we got our bill for our seed round, it was on par with our RegA. The difference is that the fees are on the back end. But if you're a shrewd enough CEO, you can negotiate with the auditor and you can negotiate with your lawyers to pay at the back end as well. So I think it's going to be one of those processes that the cost of funds it's not going to be a barrier for a lot of the issuers going forward. If if you find a great auditor and a great lawyer on that.
No, I think that's a good point, Trung. I think part of it is education. I think people have this illusion, and we need to remind them, because they don't think of the soft costs. See, when people do RegA offerings, as Andrew is alluding to, he has to remind you of, so how many phone calls did you make? How many emails did you do? How many documents did you? How many times did you redo the deck? How many times did you redo the term sheet? How many times did you call your lawyer to redo this, and that, right? RegA, you submit to the SEC, boom, you got qualified. it's finito. Let's go live. Now it's the investor
Yeah,
acquisition.
but I want to underscore some of what's been said is, we were sailing along in March of last year, and then this thing happened called a global pandemic. And we actually turned off all of our outreach, but continued our retargeting and remarketing. And then we retooled all of our messaging. Then the summer came, and we actually had a fairly warm summer in the US, and that actually changed our messaging again. And here we are in a cold spell, at least in New York. And depending upon who the issuer is, that may change our messaging yet again. So the evolution and the downside of having the 12 months is that you're going to wind up changing your messaging, and it's going to evolve within the frameworks of the issuer and with the frameworks of what's compliant. So it's not a one and done where
Exactly.
you're doing your messaging and off it goes.
Yeah.
It's a test, measure, refine, optimize
It is.
world. And
Yeah, I
either
like
you're
that.
evolving or you're dying. So
Actually, I like the way you said that, because sometimes I have to constantly remind companies every single time they come to us, and we go, look, when you come into this, you may start with this tactic, but you need to be fluid and changing and again, revising it. I mean, we see a number of our clients starting with, the video and a bit of social media. Then they pivot to adding a little bit email marketing. And now from that, they go for a few months, and now they're doing some online ads, and then they're moving in from online ads to webinars. It's really fluid. The only challenge I see with that, there are two. If you don't strategize, it's sort of like when you're going to run and a marathon. You got to run 26 miles. You're not going to do the 26 miles today, but you're going to run each day knowing that you're getting through that hurdle to get to that end goal, but the final goal. Sometimes I feel people are doing, I got to try this new technique, but there was no strategy for it. I want to emphasize, I don't know what you think about that, Andrew, because I've seen that.
well, coming out of asset management, people invest in what they call the hot dot. Oh, let's put money in GameStop. Let's put money in Bitcoin. It is better to have a strategy of getting to your end result than it is chasing things. And Oscar, you'll call me and say, I've got an issuer and they're struggling, and they're looking for something new. And I always push back and say, I really don't want to speak to that issuer, because if they're looking for something new, that's what their problem is. If they have a strategy and they have discipline, they're going to get, and they're a worthy issuer, they're going to get to where they're going, and they're going to raise their money. But if they're jumping around and not disciplined, then they're not going to end up raising their money.
You know what? I agree with you on that one. I'm seeing that firsthand. When you're constantly just looking without, and part of it, we didn't have this information before. So this is not to blame any of the CEOs. I want to be clear for anybody who's live listening to this or thinking of, this was not available to us before. A lot of this was kind of it, when we entered the market for RegA, we started finding out who all the partners. There was no one website you can go to find out who they all are. We created one. All the people we vetted in that have done a RegA are there. All this information was public anyway. It just was very difficult to find. But even with all that, that was one part. But then the second part was nobody was really telling you anything about how they did it, or they were kind of tucked away, not specific. But now that more offerings are being done, we have an opportunity to engage with these CEOs and ask, okay, what did you do? Was it planned? Was it part of the plan, or was it just something you needed to, let's say, pivot to make it work? And so I'm sorry, Andrew.
I want to share the best question a issuer has ever asked me. They said, what's the largest raise you ever worked on? And it was a successful $1 billion raise for real estate. And then they asked the question that just shook me, that stays with me to this day. They said, how influential was what you did, your data, your messaging, your funnel, your constant optimization? Was it just the right issuer at the right moment with the right offering? Or did you have enormous influence on it? And the answer that I gave and that I still stand by is yes, meaning it was the right issuer with the right offering at the right time, and we had tremendous influence, and that it would have taken much longer without us and may have not raised the full amount without us. But all those things, part of the orchestration is the issuer. You know, here we're on screen with a good issuer with a good product. I was very impressed with what your company does. So, you know, I speak to issuers and I'm not so impressed. And those are the ones who, you know, eventually either we have a conversation with or we just decline to submit a proposal. So, you know, all those things have to be in alignment, because you could have the best marketing, the best investor acquisition, the best PR. If the offering's not right for that moment in time, it's just not going to sell. It's really, that's part of the orchestration of all this.
And Trunk, for you, now that you now understand how it all works, have you created a passage from straight, you know, all the way through, or are you going to navigate doing testing and seeing what is going to work for you? I mean, based on what you're hearing today.
So I have I created different buckets of the tactics to employ, and it's all spaced out. It's over time, but just like Andrew said, when we're talking about test and iteration, that's specific to the ads, and it's also common in e-commerce. Like you're going to run a different ad during Valentine's Day, during Father's Day, during Mother's Day, during summer, during winter, depending on your product and your company. The same thing is going to happen in my opinion, with investor acquisition. And Andrew already mentioned that you know, you have to change your ad ever so often, depending on how the data gets back to you. So when we're talking about just media buying and ads, that will be an iterative process. But when we're talking about who we're going to target for, like paid media or newsletters or influencers, anything like that, that's already laid out.
So
Well,
it's good.
I'd love to have this conversation 12 weeks from now.
Yeah.
Yeah.
And see how it's going. Feel free to reach out to me and as a sounding board, because I'll be fascinated, someone with your skill set, how you're doing.
Yeah, the key is that, so obviously we discussed it, investor acquisition is it is the key to getting noticed for your RegA. There's so many other components to it that we didn't get a chance to touch on today, but you know, we talked about video, email marketing, advertising on TV, online ads. We talked about webinars, and we talked about influencers. But there's also, you know, newsletters, angel groups. There's a whole bunch of different tactical elements that are complemented, that are part of the investor acquisition, that need to be considered. And there's no way that you can think of all of them on your own. I just, that's not possible. I mean, I've been compiling this over time, and I feel that this is the only way we're going to be able to reach that larger audience, meaning there's 233 million Americans that can invest in RegA Plus today, and we haven't even scratched the surface yet, and it's just getting started. And that's just them. We've now seen, you know, institutional money coming in and investing in RegA. That's a game changer. So that means that the work that people like Andrew Korn are doing is working for companies like Tron, who are trying to get this awareness. Because in the internet, I have to remind everyone, you're not just a needle in a haystack. You got to first find the bloody haystack, and then maybe we'll find a needle. You know that expression, needle. I go back one more layer. I said, which haystack? And now with the browser.
So yeah, we had 16 months ago, we had a RegA issuer. Someone saw the ad, they clicked on it, went to the offering page, tracked down the CEO, they're an institutional investor, and created their own mini offering because they write checks in the millions of dollars. And it would have never happened. They would have never met if it wasn't for the retail online presence. But also for the way we surround that correct data set with different types of online media. So that has already been happening. It will continue to happen. We have massive data on family offices, endowments and foundations, public funds, because we solicit them for asset managers. So we're just sitting on that data. And those who have seen our presentation, we bifurcate the world: professional investors, not professional investors. But we could hit every single private equity, commercial real estate person in the US because I already have all that data. It's something that we market to them all the time with a product like yours. Now, will they invest with their personal account? Maybe. Might that influence them to do something with you professionally as well? Who knows? But thinking about that and thinking that through from a data standpoint, and not just looking at retail, but also realizing that institutions are individuals as well, is just another part of the data mindset.
Perfect. I think today was kind of threw a little ball at you, but bringing a special guest. I think it's good to hear from somebody, and I specifically brought Trung because of all the CEOs you and I have experienced over the years, and now with RegA, we don't get many like you, Trung. We don't, and it's refreshing because you're prepared and you understand the cost of the mechanism, so you appreciate the value investor acquisition can bring to you and what value you're bringing. Because Andrew constantly, and not just Andrew, the industry deal with this thing where people think it's just, all you're going to do is send an email and that's it.
No,
they don't
like
actually understand that there's a crafting to this thing, right? Like I go to Andrew when I need help. I mean, I'm doing a couple of things right now. I called him today. I said, I need 3 favors, because I know he's good at that. We're good at what we do, but he's good at what he does, right? And there are artists like that. So I appreciate both of you, Trung, especially for short notice coming in like this today. I love your background, by the way. I love The Simpsons.
Thanks.
It's good to see that.
I want to know how it's summer out the window, out your kitchen window, and how you've achieved that knowing you're in Canada. I think that's just amazing.
It's cold as hell today. It's like -20 or something.
Yeah, but I see green out that window.
But it's gorgeous though. But it's gorgeous though. It's gorgeous, gorgeous, gorgeous. There's sunny, beautiful, but it is cold. It is cold
until you walk outside, Oscar.
Until you walk outside. Yeah, of course. I didn't say I was going out. Are you kidding? Andrew, great as always. I can't wait to have you back again. We have another great webinar with you coming up in February. For everyone else, thank you so much. We went over today, and I do apologize for that, but sometimes that happens. We're not structured. We're just here to have a great chat with you. This afternoon, we have another webinar, how Canadian companies can use RegA. Yes, Canadian companies. That's right. Only US and Canadian-based companies can use it. Until then, I just want to say thank you to everyone. Have a fantastic week. And Andrew, Trung, we'll see each other again soon.